Hey guys, welcome to another episode of Stop Loss Investor. My name is Sai, and today we're going to look at the Q3 update, business update for Palantir Technologies. So the outline of this video will be looking at stock-based compensation of Palantir, which impacted their operating expenses. So we're going to look at how that works, and we're going to go over the financial highlights, points of interest, outlook for the company, as well as the ongoing contracts and partnerships that they have worldwide. So this is what Palantir expected for Q3 2020. So they expected around $280 million of revenue, representing a year-over-year growth of 46 to 47%. Non-GAAP operating income of $60 to $62 million, which excludes stock-based compensation. And they also said in their expectation that they've met the stock-based compensation of around $815 to $875 million, which was shortly done after the direct listing. So to go over the stock-based compensation plan, we can see just by looking at the numbers here that it affected very much put them in the negative, to be honest. And they say here that you would have to more or less exclude the stock-based compensation expenses for them to actually turn a profit here. So that's a major reason. And this is something that relates to direct listing, as we see here, where they resulted in the vesting and settlement of restricted stock units covering $68 million, 68 million shares of Class A common stock. So that's more or less so the common stock was from their employees' stock-based compensation plan, and that they kind of released to the public. And this involved in the expenses of around $769 million, and also incurred fees for financial advisory. That's about another $109 million. So that's essentially why they went into the negative of around $847 million because of their stock-based compensation. So once that's covered, I expect them going forward to generate operating income and also increase their margins on that operating income. So we can see that their loss from operations of $847 million was majorly due to this compensation expense, and they minus that to show their actual expense, which is around $163 million. And if we add sales and marketing to that, and they added the stock-based compensation here as well. So if we just add these two, take the 263 that they have here, which is their stock-based compensation expense, take it out of that. We'll get to these operating income and revenue levels where they reported a 52% increase in their revenue from a year ago quarter. And they also showed us a 25% adjusted operating margin and also an operating income of plus $73 million. So that's their financial highlights, which is great to see that they're turning a corner around these, and we can go forward knowing that they can generate these margins. So in Q3 2020, they said their commercial business grew by 35% year over year. And they also done a licensing of $300 million in the aerospace industry starting in 2021. And they also have multiple deals going across consumer goods, healthcare, and financial services, which is great to see. And seeing as it is a data analysis company, so it'll be interesting to see how they'll be integrated into these spaces. I think more or less going forward due to COVID, we can see a higher amount of commercial companies taking up Palantir, which would further boost their growth. So that's great to see a margin of 35%, a growth of 35%. And on the commercial side of things, they've more or less doubled their margins here. Their growth here. And they've been received a $91 million contract with the US Army research. So they're more or less working as an AI for them and AI research for them. So that's a interesting application of this data software. And also they were part of a $36 million IDIQ award with the National Center for Advanced Transitional Science. So with those ones, they're basically stands for inquantifiable or indefinite periods at inquantifiable amounts. So this can be something that's ongoing. There's no actual time periods on these contracts. As long as they serve the purpose of the National Center, they can just keep going forward, keep renewing it, and then yeah, essentially that's a renewing revenue source if they see Palantir as a good fit for their purposes. And we have to take into account actually with this government revenue the fact that they won this legal case which made it so that governments would have to use commercial software before they would go ahead and build their own. So we can see massive growth in the region for Palantir going forward in just modernizing government agencies. So they use these softwares to kind of integrate the data and I guess create better outcomes for their citizens. So another point of financial highlight for them is that the fact that their average revenue per customer growth has been 38%, and also that the top 20 customers have their revenue growth has been there as well. So I think that's something we can take an inference from that would be the fact that they're offering more value to customers who are already there with them, and also the fact that they're increasing their revenue from the customers who are coming in. So, um, so that's great to see moving forward. We can expect as these contracts grow longer and longer, as they use Palantir more and more, we can expect them to see higher revenues from these customers as well as a growth in terms of how long they stay uh, with the software that Palantir offers. And another point to back that up would be this here that in the 9 months ending September 30th, 2019, revenue from their top 20 customers comprised 68% of their total revenue. And now it comprises 61% of their total revenue. But more or less, they increased the revenue base as well. So that's great to see. And this is an ongoing point because looking back, most of their customers have been government agencies and government contracts. So moving forward, we can see that to them to leverage more of the commercial side of things, and as well as, but still keep on delivering value to their customers who've been there from the beginning. And so this is basically their business model. So they have the acquire phase, the expand phase, and the scale phase. So this is something that I covered in my previous video where I go in detail as to how these exact phases work and um, how this business model works for them and how they can generate high revenues. And as investors, we can be excited about this, them implementing this business model. So essentially, in the acquire phase, we can see that there are negatives there. That's not a bad thing. That's actually a pretty good thing. As they're in the acquire phase, more or less, they have more expenses as they have to do more sales and marketing. They would have to do more general and administrative work, and they would have to send out their software engineers to work with the actual companies to integrate this software into their operating systems, and just let their employees get used to the software. Let their Palantir's employees kind of train them for a bit, maybe on demand kind of thing, where the Palantir software engineers go into, let's say, a military uh, contract customer, and they would help and be on site, be in the battlefield essentially, and help the customers out and understand, help them how to use the software going forward. And the expand phase, they offer them more suits. They make it more tailored to the customers, and so they can get more value from them. That's why we can see a positive margins there, and also a 5x, 10x revenue growth. And from there, if we move forward to the scale phase, this is when the customers doesn't rely on Palantir anymore, like in terms of their actual sales and marketing or general and admin or the employees. So they're more or less just reaping the software subscription revenues from the customers. And they'll, in the scale phase, what would happen is they would expand across the industry, across the ecosystem for the company. So a small thing would be, for a small example would be if the police department, let's say a certain police department uses Palantir to track criminals and kind of do all that stuff. So in the beginning, they would go in the acquire phase, they would help that particular police department catch criminals in their area and learn the software, figure out, teach their data analysts and their investigators to help them kind of catch criminals. And the expand phase, they would move out into further products, further ability to use software, and also expand them across different sites. And in the scale phase, this will be implemented across board, so everyone will be using it to, um, I guess, crash criminals more efficiently, and at less cost and less risk to the police officers. And at which point, there's no real expense in the scale phase. There's really no expense to Palantir, as we can see by those margins. I mean, 69% and 68% margins here, and they're more or less kept in line from their 6 months to their 9 months. So they're more or less growing in that sense. And here we can see that if we read the footnotes down the bottom, we'll kind of explain what happened here. So the customers acquired in the 9 months ended September 30th, 2019 were not in a cohort as of uh, December 31st, 2018, and were assigned a cohort as of 31st of December 2019. The customers acquired in the 9 months ending September 30th, 2020 were not in a cohort as of December 31st, 2019, and will be assigned a cohort as of December 31st, 2020. So they actually assign people in cohorts and report this into their 10Q. So we can see this every quarter, how what customers were in which phases and how they've contributed to Palantir's revenues and their margins. So here we can see that these customers weren't there last year, and now they're here. So yeah, so when I say last year, I mean 2018. So these customers weren't there in 2018, and then moving forward from there, they've actually grew their sustenance from Palantir. So they've increased their investment from Palantir into Palantir to use their models, to use their data analytics capabilities, and to get value from Palantir. So, and that was a 175% increase. So yeah, so they're signing up new customers and converting them into significant revenue generating positions in record time from their perspective. But nonetheless, that's a very good thing to see from an investor standpoint. The fact that these customers are not only being acquired but are growing with Palantir. So going forward, we can expect that to be a higher percentage as a revenue. There'll be higher revenue growth, and they'll be more or less moved from this phase to this phase where they increase, where they contribute more to the margins and to the revenues, and from there they'll go to this phase. And so they don't really have to worry about them when they're in this phase, because they'll just be using the subscription software, and they won't really be they're incurring any expenses from the customers. And their average contract duration has also increased. Most of their government contracts are this IDIQ, where there's no indefinite period kind of thing. But the commercial side of things, they do have set periods. And going forward, I mean, just the way that Palantir works, or the software integrates to the particular commercial company's ecosystem. So I think going forward, this will increase as well, because they'll stick with the customers. I mean, previously in the restaurant, they stated that most of their customers have been there with them longer than 6 years. So, and that was mostly government agency. That's understandable, because they're more contract based. Here, it'll be interesting to see how this works going forward, as they've just ventured into the commercial space, and they're only right now gaining exposure. And it'll be interesting to see how these contracts play out or going forward. And their gross margin is increased as well when you exclude the stock-based compensation, which is, as I said, is a one-off kind of thing. And I doubt going forward, maybe 1 to 2 years from now, or even next quarter, it just won't be a part of their expenses anymore, and we can really see that being reflected in their statements. So I just want to go quickly into some of their different contracts and options that they've covered. So, such as with the Fortune 100 consumer goods company, they deployed ERP suite to quickly respond to COVID-19 related disruptions. Now, our main platforms are connecting the entire value chain for procurement to distribution. So, it's an unfortunate thing that COVID happened, but I think for Palantir, it's very much helping them as more companies more or less rely on these capabilities of visibility across their supply chains, and they will really have to kind of figure out a way to use data analysis to improve their logistics. Um, just in a world where shipping is so important, as no one can go outside and buy them stuff themselves. So major companies will be using, I think, will be integrated with Palantir to kind of move their manufacturing across in a more efficient manner, as well as how to get it from procurement to distribution, as I said. And the 2 year contract that they signed with the Army Research Lab is quite interesting to see, because it's more on artificial intelligence and machine learning development side of things, as they're more or less running tests. They're not on an operational basis. This is more like a research side of things, as I said. So it's an interesting application, and I think going forward, many companies will use it in a similar way. Maybe even educational systems like universities across America or around the world could use Palantir as a software that can be used for AI capabilities. Even possible gaming companies could be using Palantir as an AI company to kind of run data analysis to see how things would work. And many of the, obviously, companies such as software in healthcare systems are using Palantir right now to kind of run data analysis. And this is an interesting phrase that they used here, that the software is becoming a de facto operating system for US and allied defense. And the great thing about operating system is it's very hard to replace them. You can't just change operating system. It's not that easy. I'm currently using a Windows, and for me, going to a Mac would be annoying, to say the least. So I think when you're in a US and allied defense environment, I think an operating system that you can rely upon, that you understand, that your employees understand, or the soldiers understand, and then moving forward from there, it'll be very hard to replace Palantir once they kind of get this foothold in these areas. And they're doing more or less a similar thing in software, in healthcare, and trying to help them, in terms of like vaccine research and development to distribution. So it's very hard once it becomes a operating system to kind of move away from that, as it's not only taken away from an operational standpoint, but it also change how many of the systems work within that particular institution, where their employees won't be able to work the same way. They would have to learn new things. They'd have to gain, I guess, new skills, and that'll take time, and that'll take time away from their actual jobs, more or less. So it'll be interesting to see how this develops in the commercial space, as it's very much, competition is very much heated in that space. So it'll be interesting to see how that works. As people are always looking for an edge. So the moment that one company is doing something better than another company, these companies that issue contracts are more likely to switch because they offer something more suited to their needs. And I think that's where Palantir's ability to write code comes in, where they can make it specific to that healthcare system, or to logistics or other things. And also the fact that they actually send their employees in the acquire phase to have a look at how this company operates, how this institution operates, to deliver more personalized value to that institution. Um, and that's the main reason. That's why they have very high expenses, and the revenues are so low, because they're trying to more or less convince or sale, make a sale with this institution to say, hey, we have the software, we have the people, we have the knowledge. We can see your people are working. Let us help you, and let's try and figure something out here. And let's integrate the software, see how beneficial it can be for your company. And then from there, as they get more interested in understanding, okay, we can do this, we can do that, we can move forward, we can gain better insights into our business, we can help customers better. And then from there, they won't need to use Palantir anymore, the employees, Palantir's employees to come and help anymore. And then, when they go into the scale phase, the expand phase or the scale phase, it'll be more of a circumstantial basis where they need this particular thing for this particular R&D issue or whatever. And then they'll call up, the software engineers Palantir, and they would go in and they would work things out. And they would make sure that they can, the Palantirians can give the institution what they need to keep going forward and, keep the contract alive, essentially. And here we can see them not only helping the US, we see here that they helped supported the president of Colombia through their pandemic response, which was fantastic to see. So they're more or less going out of their US concentration base and moved to other countries, other nations, and trying to see how they can better help these countries. So we've seen that previously in their S1, they talked about they're very much against working with non-democratic, liberal democratic nations. So we can more or less say that they won't be working with China or working with Russia, things like that. But in terms of Colombia and England here, and Japan in this case as well, where they've gone into Japan and they're helping, they've created a Palantir Japan, and they're helping change how things work there in terms of data analytics side of things. And they've made several other investments with other companies in Japan to increase their, I guess, efficiency. So in this particular case, their expansion continues, where in June 2020, Palantir selected Sompo Holdings, the Tokyo-based insurance company and Japan's leading nursing care provider, as their strategic partner. The company is currently one of their most significant shareholders as well, which is an interesting thing. Following its approximately $500 million investment in Palantir this year, I'm sure that paid out well for them. And this is something Alex Karp said, where Sompo's work is vital to Japan's welfare and security. And Kengo Sakurada, the company's group chief executive officer, has been a critical and trusted partner as we work with Sompo to expand our reach in Asia. So we can expect them to go from there to maybe into some of the other countries such as Singapore or Malaysia, and maybe move into even India. And I think India really needs Palantir. Most of their it's very old school, most of their works. Obviously, there's plenty of startups in India, but I think Palantir can do a great deal of help to India's operations. And yeah, so this is something that this is part of their expansion into Asia, which builds on their already significant presence outside of North America, including Europe, as we've seen before, here in England's NHS and NIH, or yeah, NIH, and they work in the Middle East, where they have a presence there with with the army, obviously. I think any of the allied forces, I'm sure, would be using Palantir as well to help them defeat their enemy. And in South America, as we see with the president of Colombia. And from there, we go on to the revenue guidance that they offered us. They offered us a 2020 revenue guidance growth of 44% and around possibly $1 billion. That'll be great to see. And an operating income guidance of $133 million and a 12% margin. And the great things about these guidance is that they're very true with the strong visibility side of things, is because they're more or less done on a contractual basis, where these multi-year contracts, we can more or less say, if we go back to this this 2-year contract with of $91 million with the US Army, we can say, okay, that's $40 million that's going into the bank next year, unless obviously if there's any issues with the contracts and they terminate the contract, but I'm sure Palantir will not let that happen. But these are the things with these contracts. It's very easy for us to kind of push out these revenue guidances, and when they say they have a $300 million with an aviation company, a $300 million contract with an aviation company, and it's a 3 or 5 or 10-year deal, we kind of push out a revenue guidance for ourselves going forward, and see how much we can expect. And as each new partnership that they bring in, we can just more or less add this to our total of the contracts, and we can see how the revenues kind of increase. So it's very much important for them to, I guess, use sales and marketing to keep procuring these investments and in these companies, and offer them solutions from Palantir. And yeah, it'll be interesting to see how going forward we'll see them grow. I think they're just in the beginning of their growth phase, as they move out into the commercial space, and we can see this guidance to grow, at possibly at 40% year over year. So it'll be great to see them push forward in the commercial space. And I think they're very much with their work with government agencies outside of the US. We can see them gain more traction, gain more notoriety in with other democratic governments. Obviously, they won't work with non-democratic governments. So yeah, I think it's a really good visibility standpoint from us, for us as investors. We can, when they give us these contracts, when they give us these numbers and their contracts, we can really make our own valuation and judgments as to the growth of the company, not really having to rely so much on their guidance each quarter. I personally believe that the company will be around $3 billion in revenue by 2022. And going forward, we can expect them to have higher operating margins as well. As more of their customers move into this scale phase side of things, I guess sales and marketing expense will lower as well, as they become more well known, and as I said, receive more notoriety from various agencies across America, as well as Europe and South America, and also Asia. So it'll be great to see how Palantir will grow in the future. And so with that being said, I think that's a great first public business update that they offered us. It's great to see. Did see a variety of articles kind of more or less downgrading Palantir, or I'm concerned, talking about their concerns regarding their stock-based compensation loss. But as we covered today, it's a short-term thing. It's not going to go forward. Going forward, we can expect them to keep posting those operating income revenues and increase their margins as well. And as we've seen with that, their business model, it's very much focused on that acquire phase. I mean, that's very important to them, and that's where they spend most of their expenses, and that's why we see them not really generate as much revenue as they can in the scale and expand phase, because that's the important phase where you get the customer in, let them know how the product works, let them use the product, make sure it's part of their everyday use case, and from there they can grow, and they can obviously, if they're focused more on not just giving this product, they more or less want to give them a system of operations. And from there, that's where we see the contribution margins and the revenues grow in the scale phase as they keep renewing these contracts and keep renewing at a higher rate as they're bringing more value. So yeah, I'll look forward to Q4 update from them. And I guess as an investor, I'm very much happy with that update they gave us so far. And it's still a buy rating for me. Personally, I'm still going to buy the stock at the current, I think, price of around $16 it's at. So yeah, so going forward, it'll be great to see how they move. And with that being said, I just wanted to thank you for your time. Like and don't forget to like and subscribe. And if you have any comments, put them below. If you have anything to say about the company or regarding their contracts. There's one thing I haven't really found out is how they kind of get to these numbers regarding the contracts. When they say they signed a $91 million deal, I want to know how they got to $91 million, which is something I haven't found the answer yet. But if you have, or if you have an idea as to how they get to those numbers, please comment them in the comment section below, and I'll look forward to your thoughts. Thank you.